located in Madison, Wisconsin. He graduated from Fordham University in the Bronx, which for the Packer fans out there is the school where Vince Lombardi played football. Mr. Plourd has his thumb on the pulse of the dairy industry and has been providing market intelligence and consultation for over 20 years. His team provides the dairy industry with a variety of reports and podcasts on a wide range of topics, such as regional profitability, market fundamentals, transportation, and risk management strategies. We welcome and thank you, Mr. Plourd, for sharing the dairy experience with us here today. Please share your screen. I see it's already shared. Thank you.
Yeah, thanks, Kalen, and thanks for having me today. One thing's for sure, if you're a school that has a football team and you're still trafficking in the glory of Vince Lombardi, who attended in the 1930s, it just proves that you aren't very good at football. But proud to have Vince, and now that I live in Wisconsin, people actually know what Fordham is. I'm going to take you through a trip here this morning through some of the issues and questions that came up in the dairy industry as part of the pandemic, and hopefully seed some thoughts and some questions about what we're thinking is important going forward from a trends and revelations perspective. I think one thing that's abundantly clear, as this slide shows, is that the industry experienced massive price volatility in 2020. U.S. dairy markets were among the most volatile in the world. Crude oil is not on this chart because crude oil blows the scale. But after natural gas and lean hogs, block cheddar cheese was way up there, and it's still pretty volatile today. You can see butter right next doors to it, way more volatile than coffee, live cattle, corn, the S&P 500, et cetera. And even this, if you look at cheddar cheese prices, you can see basically double the long-run historical volatility. So a lot of noise in the marketplace, pricing-wise, and the pandemic played a huge role in that. This is a long-term price chart, and you can see that we managed somehow to go from what was a multi-decade low in April when the world hit the skids and the rest of the food service industry shut down, to a high of, the daily spot market got to over $3 a pound on a couple of days within basically 100 days. As a function of some government remediation efforts, a restoration of some of the food service business, a bunch of exports, and so really massive volatility. And the story begins when we look at the trends between restaurant sales and grocery store sales historically. Pre-pandemic, you can see these lines converging in this past, in the decade of the tens, where by 2020, we were spending as much money in restaurants as Americans as we were in grocery stores, and in some months, even a little bit more. So dining out dollars and dining out habits, well ingrained, and so a 50-50 split of dollars anyway between grocery and retail. When we look at what that meant in terms of the dairy industry, we were charged by one of our clients with assessing the share by segment. These numbers are somewhat rule of thumb, some half scientific, half rule of thumb. The data is hard to collect. But you can see on the table on the left, pre-COVID-19, from a dairy products perspective, we assume that fluid milk, for example, milk in a jug, about 66% at home, 20% at institutional, which would be schools, commissaries, and 15% in restaurants. Cheese, you can see 48% of cheese consumption in food service, 10% institutional. And so a really big food service profile for a product like cheese. Butter, not so, butter a little bit more evenly split, but you can see that once we got to March, late March, early April of last year, when the restaurant industry got hit pretty hard, we lost a significant amount of channel business in the dairy industry. The chart on the right is just another way of looking at the data that's on the left. So just a reference point. So the bottom line is, early April comes around, we're in a national lockdown, and a lot of restaurants went, totally dark. Certain segments did okay. QSR, pizza remained open. We'll talk about that. but you had a really, really big problem for the dairy industry during those weeks. And this graph this chart hints at what's happened post-pandemic, or as the pandemic has unfolded. You can see in March, dollars, year-over-year change in grocery spending up 27% as people stocked up. Restaurant sales down 27%. These are dollar figures. And then April, the restaurants cratered. And you can see they've come back, but you still have a different skew today from food. Food service in the month of February was down still 17% on a dollar basis, while grocery stores were up 12%. So this has created massive disruption. You were talking about pack sizes, for example, in the previous conversation. Some of the players in the cheese business have the ability to, if you shred cheese, it's easy enough to send it to a grocery store as a restaurant, except for the fact that grocery stores like 8-ounce packages and food services 5-pound bags, and didn't have a lot of the adaptability to adjust quickly. Here's the other thing that we always run into trouble with in the dairy industry. Milk is perishable. And so we had a situation in the month of April where we dumped millions, 350 million pounds of milk were dumped down the drain in the month of April, just because dairy farmers lost their market. So there were certain cheese companies that specialized in where the preponderance of their business was in food service, and their orders went to zero. So for example, one of the things that we've learned amidst this is that people don't eat a lot of feta cheese at home. Fancy blue cheeses, certain types of cheeses, much more food service application than home application. And then some companies with a distinct skew between their client base, where they're very much food service or very much retail. And if you were in the food service space, your orders went to zero. And so dairy farmers were forced, and they told their dairy farmers, hey, look, they tried to move the milk around, find different homes for it, but there's a clock on that. And so you saw that massive dumping of milk in the month of April. Just went down the drain. Another thing to keep in mind in terms of this mix for dairy is that school has been sort of a sneaky area of disappointment. I think we've recognized the value of schools more than ever in the past year. And we figure that, basically 8% of fluid sales go through the school lunch programs. We think that there's about 750 million to 1 billion pounds of cheese that goes through school lunch, either on pizzas or sandwich slices. And so as we've seen schools in virtual only mode or some sort of hybrid mode, that's been a really big problem for demand in the dairy industry. Now things have gotten better to where this week, 21% of, we're down to only 21% in virtual only mode in terms of schooling across the nation. This is great data put out by a company called Burbio, and 49% in person every day. But even in situations where school are in person every day, lunch doesn't look like lunch. My daughter went to school today for the first time in more than a year, actually this morning. But they're not having a lunch in any conventional sense. A lot of school districts set up distribution programs to try to get food out there to people, because a lot of people certainly rely on the school lunch programs for nutrition. But the uptake on that has been at best half the volume of what we've seen in schools. So when you look at conventional milk sales in the United States over the course of the year, down about 2% from 2019 levels. That was a big problem. Here's another thing that happened in the pandemic that was very strange and very fascinating to me. We saw grocery stores cut their SKUs significantly during the pandemic, and some of that lingers. So, people are rushing to the store, they're clearing the shelves. People told us that if you had a product that was still sitting on a shelf in some quantity in April of 2020, that product was no good, or nobody wanted it, because everything else was being cleaned out. And I think that forced a lot of retailers to say, hey, look, we're selling a lot of these cleaning goods, they're high profit margins, they're in demand. Where can we cut back on other things? The other factor is logistics and labor perspective. Having fewer SKUs means less handling, means more full pallets, less than full truckload trucking. And everybody seemed to like it for a bit. I think the marketers were like, okay, this is simpler. We're going to pare down a little bit in terms of our offerings. The grocery stores like, okay, this is a little simpler. So you can see in the month of June of last year, dairy product SKUs in retail down 7% year over year, which is just a little bit below the 7.3% of the total store decline. And I think that if you look at the Aldi model and the whole paradox of choice question, I think a lot of retailers have kind of liked where they are. And I think even the manufacturers do too. It's just a lot simpler. Now, the big question is, what's the temptation to go back to the old ways, right? With line extensions. I mean, how many varieties of Hershey Kisses are there in the world today? The answer is several. And so, as we pare back, our people say, hey, look, I want to differentiate, and I differentiate by line extensions. There are other reasons to extend lines. But there has been a fair amount of restraint in grocery stores around SKUs. And I think some of this is going to persist. So here are some questions for further study that I think are compelling in light of what we saw in 2020 and where we are today in 2021. I think one of the questions that's come up is, can we afford to have extra capacity to process milk in case we ever see another massive disruption, meaning some sort of shared resource where we can make long-hold cheeses or butter or milk powders just in case. Now, a new butter powder plant costs $250 million. A new cheese plant you can't touch for less than $1 billion. So, the physical assets to process milk are not cheap, but it did raise some questions around, what do we do if we find ourselves with no home for the milk? I think there's a question around, consolidation at the processor level in a way that allows companies to balance their portfolios between retail and restaurant customers and products. Some of these cheese companies that with a very, very high degree of food service, they have really, really continued to struggle. Now, the food service business has gotten back on its feet to some degree, but you saw the numbers are still down 17%. So I think that, will this drive additional consolidation or investment? Is just-in-time dead or just on hiatus, right? We leaned up supply chain so much for years and years and years, and what we discovered in the COVID situation was, oh my gosh, we don't got enough. And of course, inventory costs money. And when you talk about dairy, you're also talking about perishability. Do we need more extended shelf life products? Do we, and then who's going to pay for the extra inventory? And back to that SKU rationalization, will it stick? And what does that mean for the dairy category? Are there differences about the dairy case versus a regular aisle in the grocery store around those questions? All right, let's go on to another topic. This is one of my favorites. I don't know that I've said too many brilliant things over the years, but one of the smarter things that we've talked about is around consumers. And this was an actual promotion from 2019, and it was a joint promotion between Lazy Boy, McDonald's, and Uber Eats. And basically the premise of this promotion was you can sit your fat rear end on this couch, push a few buttons, and Uber brings McDonald's to you. If you look at on those middle sections here of this couch, these are actually cool. They're plug-in and cool. You can keep your McFlurry cool in this giveaway couch from Lazy Boy. And the premise that we have, and it's served us and our customers well over the years, is never underestimate the laziness of the American consumer. Time and time again, we prove ourselves to be relatively lazy. So what does that mean? Well, one of the things with the pandemic, we were already accelerating. This trend has been a long-term trend, and we've seen technology and services adapt to it. The pandemic accelerated it. One of my favorite charts is the stay-at-home trade. Looking at stock performance over the past 5 years, look at the stocks that have done well. Amazon and Netflix have obviously crushed it, right? We sit at home, we can't get out of the house, we stream movies, Amazon drops us packages, Grubhub delivers us food. This is Domino's Pizza, DPZ. I would say that if you think about Domino's Pizza advertising over the past 2 to 3, 4 years, it's really about how few buttons can you push on your phone and have a pizza appear on your lap, right? When's the last time Domino's really talked about the quality of their pizza or their menu or their food? Really, it's all about technology. So these stocks have done very well. Meanwhile, and this was true before the pandemic, Meanwhile, if you go to the right-hand side here, Bloomin' is Bloomin' Brands. That's Outback Steakhouse. Eat is Applebee's, and no, Eat is Brinker. That's Chili's, On the Border, Maggiano's Grill. Dine Equity is Applebee's and IHOP. Basically underperforming the S&P 500. Kroger, grocery store, a little stodgier, right? Walmart even underperforming or just about at the S&P 500. So the lazy American stocks doing quite well. Home Depot, we're tricking out our living rooms because we don't want to leave them, or we couldn't leave them for a while. So what's the future for restaurants? Food and drinking place dollar sales down 19% in 2020. Right now, we're at a place where about 65% of businesses and dining rooms, with 35% for off-premises consumption, drive-through pickup delivery, based on some data we study. So what does the new normal look like in the restaurant industry? I don't presume that we're going to stay here at 35%. We're social people. We like to go out to eat. I think a lot of us are dying to stop cooking at home, stop doing dishes, and gather around the table at a restaurant for great food with family and friends and whatnot. But at the same time, if you look pre-pandemic, only about 12 to 15% of those sales were were off premises, and now we're at 65. My hunch is that the new normal is going to be somewhere closer to 20, 25 to 30% than where we've been. And then, technology is really driving this. If you look at this graph from the Wall Street Journal a few weeks back, and if you look at the sales by apps, way up. And then, Morgan Stanley, and this is even a little bit old. I wish they would update these numbers. This was done last summer. But the projected share of online delivery for U.S. restaurants, pre-pandemic, JP Morgan thought we'd be at 15% by 2025. Now they say 21% by 2025. I bet you that number is even higher today. And so will we continue to just push buttons and have food appear? Yeah, we'll go out to eat a little bit more than we have been. But if you just think of the infrastructure around dairy, around delivery and pickup over the past year, massive investment, massive improvements. From a dairy perspective, one of the things that's been a big savior for the dairy industry is that while the restaurant industry has crumbled, pizza has done quite well in this environment. It holds up great under delivery. It's popular. It's easy. It's relatively cheap. You have chains that have invested in the technology, as we discussed. So the big chains put up big numbers. Technomics says that only pizza and chicken concept sales increased in 2020. But the other thing to keep an eye on is this concept of ghost kitchens. Lots of new delivery and pickup concepts are emerging, and they're emerging in interesting ways. So I've shown you on this particular slide a concept called It's Just Wings. And here's the menu at It's Just Wings. Boneless wings, bone-in wings, curly fries, and then some sort of fried Oreo type dessert. Basically 4 menu items. This concept operates as a DoorDash only concept, and it operates out of Chili's restaurants in the United States. But you cannot drive up to a Chili's restaurant and get this. It has to come through DoorDash. This business was already doing $3 million a week across the country as of late last year. And if you look at like Red Robin, their stock has been bouncing around. Their on-prem has been really hurt. They have at least 3 ghost kitchen concepts that they've started here in recent times. They bought the Donato's pizza brand somewhere along the way. That used to be a McDonald's thing, actually, a co-investment out of Ohio. But Red Robin has Donato's pizza plus 2 other concepts that they're just marketing as delivery and pickup only options. And you can't order it off the Red Robin menu. But look, these restaurant chains have the facilities. They have the kitchens. They have the infrastructure. And with technology, the leverage they can get is pretty incredible. But here's the question that it begs from a dairy perspective. Back to perishability, right? All right, perishability is one thing, but the other question is portability, right? How does the food hold up under a 20-minute, 25-minute, 30-minute drive home? When Brinker went to the people in their organization and said, we want to develop a ghost kitchen, they came up with It's Just Wings because wings hold up great under delivery. Pizza obviously does great. The cheese on a cheeseburger, so-so. Cream sauces, a little bit of a struggle. And so I think that for dairy to be competitive in this go-forward environment, we need to be thinking about how we innovate, how we develop products that hold up under delivery. We had a guest on our podcast a few weeks back. She was the development chef for Bloomin' Brands, the Outback Steakhouse people, Carrabba's Italian Grill. And she said that they figure that you have to have 45 minutes of travel time. That's what you got to plan for when you're developing menu items for this pick-up, take-home business. So what's the road back for restaurants? I think that one of the big issues we're going to see is the travel industry remains hobbled, and I think that in the era of Zoom calls, we're going to see, and budgets and whatnot, we're going to see a lot less business travel, certainly the year ahead. The American Hospitality and Leisure Association says full recovery is not expected until 2024. So what does that mean for restaurant cities such as Chicago, where a lot of the business that comes to those restaurants is coming from convention traffic and business travel? I think that that's certainly. I think the fates of the restaurant industry, certainly the higher end restaurant industry and urban restaurant industry, is absolutely tied to how the travel industry comes back in the next year, 2 years, 3 years. There's also a grocery dimension to this. Amazon sells a lot. In case you hadn't heard, total e-commerce sales up 22% in 2020 versus 2019. And then we see online grocery store sales up more than 5x versus pre-pandemic levels. And so here again, how does dairy adapt? When I order pickup groceries at my local Hy-Vee, they've got like the cooler in the parking lot kind of thing. They got this little hub in a parking lot where they keep stuff cold. But that you have to be careful with how you handle dairy products in those situations. And certainly from a mail order perspective, that puts a lot of things out. And again, back to our original concept, don't underestimate the laziness of the American consumer. All the infrastructure investment, all the convenience that's been added to online grocery over the past year, I think people like it. Yes, will they go more to the grocery store? Yeah, probably, or be a little bit freer in the grocery store in the months ahead. Sure. But I think that this is not going to go back to where it was. And what does that mean for the dairy industry? So a few questions to maybe think about further. How does the dairy industry address perishability in an online delivery pickup world? How do we address portability in an online delivery pickup world? And the other one that I didn't really touch in here, but I think is important, is how does the dairy industry recreate impulse sales in an online delivery pickup world? Think about specialty cheeses, for example. You might have on your list to buy cheese shreds for an ingredient for a dinner, or maybe even processed cheese slices for hamburgers during grilling season. But how often do you have on your list a nice wedge of Sartori Bellatava Italian style Merlot rubbed cheese? It's delicious, but it's $7 for a little wedge. That's the kind of thing I think most people go to the grocery store, they see it in the case, they see it in a sample situation, and they pick that up and put it in the cart, right? I think with confection, checkout sales, well, dairy plays into that. So how do we recreate impulse sales in an online delivery pickup world? And that's a huge question out there that goes beyond dairy. But I think it's an interesting one for somebody to be thinking about in the years ahead. All right, one last area that I find interesting. I think work from home is going to continue, certainly into 2021 and beyond. I think that people have generally liked working from home. I think in a lot of situations, it's worked for people to work from home. It's not perfect. It's not for everyone. And there are certain types of businesses where it won't work. But I think that, I've been to my office in a year. I don't care. I don't think anybody else cares. And I just think that working from home is going to be, again, that trend was already out there, and now COVID's accelerated it. We'll see a bit of a rollback, but I think it's going to be more than what people thought it would be pre-pandemic. And Willis Towers Watson polling shows that companies believe 30% of their full-time employees will be working from home in 3 years, up from 5% 3 years ago. That's a pretty big number. So one of the things I think that's happening is that's spurring an urban retreat. More than 1 in 3 millennials say they're considering leaving their cities within the year. Lots of people leaving places like New York, Chicago, moving to the Southwest, to lower tax states, better weather states. This is the Van Lines National Movers Study, people moving in and moving out of different places. You can see the industrial Midwest, people getting out and moving to the business-friendly, climate-friendly Southwest. All right, that's all great. But if people are leaving Chicago and New York, to go work from anywhere, what does that do from a restaurant scene perspective, right? If we're all working from home, what does that do for breakfast traffic at the local Starbucks, where people go through the drive-thru to get their big latte on the way to the office? If they're not going to the office, what does that mean for dairy consumption? There's a lot of dairy that goes through a Starbucks or a McDonald's morning coffee drive-through, Dunkin' drive-through line. So what happens to the breakfast day part at food service? What happens to the lunch day part if we're all working from home? What happens to the business dining scene in these big cities if people are leaving, or at least culturally, where people who live in New York that never cook because they don't have to, if they're now living in Westchester County, or even more remote like Orange County, New York. Yeah, there's restaurants, but it isn't the same thing, right? So how are we going to adapt to deliver the convenience of dining out through some mechanism to those people? And then what are the dairy implications to that from a product mix, again, portability, perishability perspective? I think that these trends are going to radically reshape the restaurant industry in the next 2 to 5 years. And as we noted at the very top of this presentation, more dairy, more cheese was moving through restaurants than through homes, before the pandemic hit. I find this amusing. I think that Americans, we're sort of an indomitable spirit, a yearning to be free to some degree, and let's go find some wide open spaces, with no need to go to the office. People are actually taken to the open road. Look at RV sales last year. They were up 33% year over year, July through December. And there was this really cool article in Bloomberg a few weeks ago about how Airstream is getting a lot of calls about what kind of office setup can I set up, in an Airstream. So the Airstream, you can get this sort of like, work from home setup from your Airstream trailer. And while it's kind of amusing, look at the RV sales over the past year and what's happened to them. So questions for further study. I've already mentioned some of these, but I'll mention them again. What's the impact of less commuting on drive-through breakfast coffee? If we are working from home, are we going out to lunch? And what does that mean from a dairy and dairy products consumption perspective? And does the migration to suburban and rural areas change restaurant spending and habits? I think those are things that will be very interesting and very important for dairy marketers in the months and years ahead. Oh, sorry, government involvement. That's another thing we saw in a big way during the pandemic, is the government came in and said, hey, we're going to buy surplus commodities. We're going to feed people. We saw something called the Farmers to Family Food Box Program. So far, the government spent $3.8 billion in 2019. Round 5 started in January. It looks like they're going to spend $1 billion on food boxes through April of this year. And then the latest stimulus bill just had $3.6 billion of funding for additional USDA purchases in the months ahead for COVID as part of the COVID relief part. It's kind of interesting. $3.5 billion doesn't really add up to much in the light of a $1.9 trillion stimulus bill, but $3.5 billion into food, that's a lot. And if a third of it goes to dairy, $1 billion will buy a lot of stuff. And what does that do to markets? We figure that for every $1 billion spent on dairy by the government, that's about 0.5% of U.S. milk production. So what's the interaction between food banks and grocers and restaurants and market volatility? The government, this round 1 food box deal in 2020 was, a big driver of how we got to $3 cheese, because we had exported a bunch of cheese when the price was low. The food service was coming out of deep darkness into something. Retail sales were great. Milk production was so-so. And all of a sudden the government was buying huge amounts of cheese, and that helped propel the marketplace. So what's the role of government spending? And then where does SNAP fit into all this? I think there's a belief that the Biden administration is going to be friendlier to a program like SNAP, a traditional type program for getting money for food to people in need. What does that mean for dairy in terms of versus food boxes versus how much cannibalization is there from other channels? Does it put us, does it kind of keep the skew back on retail a little bit? So I think those are kind of interesting questions to think about from a dairy perspective. And so I think that the question for further study is, what's the comparative impacts on demand from government spending via direct procurement versus providing additional SNAP dollars and or eligibility to people? And if you're ever looking for a very exciting dairy podcast to listen to, Kathleen Wolfley and myself do something with the International Dairy Foods Association every other week called the Dairy Download. Try to make it lively. If you're into dairy, the dairy thing, give it a listen. And that, folks, is my prepared remarks.
Well, thank you, Phil. We'll be sharing some questions that have been drawn from the audience.
Okay, so there's a question too that popped up elsewhere. Let me answer the one that came through the chat window first, if that's okay. The question was, is there a segment, cheese, fluid milk, yogurt, and the processor level that you expect to consolidate more than others, and why? I think, I don't know. I think that you'll see more cross investment and consolidation in cheese. There's already been a lot, but I think in terms of broadening people's portfolios, that's where the yin and yang was the greatest. But I think that you might also see some fluid milk, you might see some more bigger conglomerations. For today, your big fluid processors don't do much in cheese as a general statement. And you might see some more marriages on that level. So I think cheese is the one that has the most interest in terms of from where I sit. Question one, what policy changes are needed to negate the dump milk issue? Has the industry started to advocate for those changes? Well, I don't think the dump milk issue is a policy thing. I think the dump milk issue is changing the biology of cows and milk. I don't know that there's anything you can do policy-wise. I will say that policy-wise, USDA and the milk pricing regime has been flexible around how to treat that dumped milk and pool it across the regional milk pools. And so, a dairy farmer whose milk was dumped, those losses were not incurred exclusively by those dairy farmers. They were shared within the market-wide pool. So we already have a system that sort of socializes those losses. But I don't know, I mean, the clock is ticking on milk. And, until you change the perishability, I think that's the biggest issue on the dumped milk thing. Question two, there's a trend of small meat processing plants popping up to meet local processing demand. Can something like that be possible for the dairy industry? Could this trend be sustained in addition to large capacity processing plants in the future? I do think that there's definitely been the whole locavore, know your farmer, food is close by, stuff that I think this question alludes to. I think we've seen those impulses in dairy. And I do think that, dairy is hard. It's been hard to find the middle ground. Yeah, we have some farmstead cheese operations and milk bottling operations that are viable, profitable, but they're really small. And then the middle ground, there's a big space, and then you get to gargantuan. And I think that's around the processing economics. It's a part of the federal pricing system that makes it very difficult to do stuff that's mid-size. We're called on to help people develop. People say, hey, I want to build a cheese plant. What do I build? Where do I build it? Is it possible? And it's very hard to pencil out a cheese plant that is medium or small from a profitability perspective. So I think you can see some micro stuff. I don't know that you'll see some middle ground stuff. Do I have time for one more? Hearing no objections.
You've got some time? Yeah.
Okay. Oh, again, I guess I answered question 3 already. Is there a segment? I put that at the top of the list. So those would be the questions that the audience tossed out there. I'm happy to take any others if you have them.
Well, I can read you one. Could sterilized or shelf-stable milk products be a solution for products in the future in addition to pasteurized milk?
Yeah, I think it's, I mean, there's this sort of odd culture, I don't know if it's odd, but there, it's definitely a thing in America where, shelf-stable milk does a lot better in places outside of the US. It's very popular in Europe. It's popular in Mexico. So aseptic, super UHT, type processing. And then it has not really caught on here in America, but I do think that there's more demand for it. And I think that, I think we will see people make some investments in processing capacity. I also think there's going to be a lot of R&D work done around aseptic UHT, ultra UHT type products that are in more ingredients or more food service type friendly items like cream sauces. Because a lot of these restaurants had to dump that perishable stuff when they went dark and then buy it all again when they came back online. And I think that some of our clients that do a lot of R&D work in that food service space are being asked questions about, applying those sort of technologies to creating more shelf life for more ingredient type stuff, as well as for, more prosaic stuff like fluid milk. So yeah, I think that it's not been a hidden part of the U.S. industry. It's got its thing, but I think the demand for aseptic and high UHT has definitely grown, and you're going to see more of it in the months and years ahead. There's also some interesting export opportunities around UHT. China is importing bunches of UHT milk from places like Australia and New Zealand, and there might be some opportunities for on that front as well.
I have another question here that was posed. What is the regional movement of fluid milk? In other words, how far does it typically travel?
It travels quite a ways. I mean, you see, part of the other challenge beyond perishability around milk is seasonality. And so, cows don't produce milk equally, month to month. And it's all about the lactation curves and life cycles. As a general statement, we have more milk in the spring and less milk in the fall. And so, once schools start in August, I mean, in a normal year, you see a lot of milk that moves from the Southwest and the Northeast, Midwest into the Southeast to fill bottling plants. So the bottling plants are local, but the milk is being supplied. You'll see milk move as far away from West Texas, New Mexico, into Georgia, Florida, and that milk, so there's enough supply maybe in April in the Southeast to kind of keep the bottling plants near full. But at certain times of the year, you'll see milk coming from, it kind of stair steps, west and north. But most of the action is milk moving into the Southeast, where we've seen a lot of population growth over the years, and it's not the best dairying, well, I guess, I think in Mississippi, you've seen that over the years. It's not the best, dairy farming environment, or the local dairy industries have not grown, and in fact have contracted. So, the federal milk order system was written in the 1930s before we had refrigerating trucking in the interstate highway system. Milk moves, every day from Roswell, New Mexico, to the Atlanta area.
Thank you. I have another interesting question. What are you advising dairy producers to plan for this coming year in terms of risk management, input costs, or other profitability drivers?
I think that one of the things that we've been careful to talk to dairy farmers about is that, the government helped out a lot last year, right? You had CFAP payments, you had PPP that a lot of these dairies were able to get money. You had massive government purchase of dairy commodities, which boosted markets. So you had a lot of government help, either directly or indirectly, last year. And while some of that's going to be prevalent again in 2021, like the the $3.6 billion of food buying I referenced earlier, I just don't see as much direct payment action into dairy. So I think that's one thing to be aware of. I think that on the milk income side, I think that we are flirting with oversupply every day, just based on massive productivity growth, consolidation, long-term trends. But, when milk production in the U.S. is up by more than 2%, we've kind of got a problem, unless export markets are really humming. Now, the export markets have been okay here. There's logistics issues, which is a whole nother chapter. So I think that at any given point in 2021, we could wake up and say, oh, wow, we have a lot of milk. And I think that's, I'm not super bearish, in a disaster kind of way, but I just think that the upside, that milk production at north of 2% for the first 6 months of the year is what we expect. And I think that provides a lot of insulation against upside noise and creates risk for downside movement. On the feed side of things, corn, is $5.50 a bushel. That's new over the past few years. Soy mill's gone crazy. I think some of that's legit. South American weather, China imports, U.S. crop, the carryout numbers, USDA thought we were going to have 3 billion bushels of corn carry out at the end of this year. Now they're down to 1.5 billion. So I think that we're going to be on edge through the planting season. I don't think those markets are going to let go. If they do at all, they're not going to let go until we see a crop in the ground and maturing nicely. And that could take until, the middle of July. And there's no guarantee that that it all works out, but I don't think we're going to relax for several months. I think that I think that we've covered most of the upside here, unless there's a planting season disaster. So I just think, it's going to cost more to produce milk in 2021 as a function of higher energy and higher feed. Maybe we see some, we can make a lot of corn fast. We can see things calm down second part of the year, but it's going to take a while for it to wear off. So we've been very aggressive with DMC, which is when that ship has sailed, the USDA DMC Dairy Margin Coverage Program. We recommend that producers, that's a no-brainer, just sign up for that. And then we work with a lot of dairy farmers on dairy revenue protection insurance. And we've been reasonably aggressive with that program as it's subsidized put options, basically. We think it's a pretty reasonable way to take that disaster risk off the table. And the good news is, for most dairy farmers, you've been able to protect close to break-even levels with those instruments.
Okay, well, thank you. Thank you very much, Mr. Plourd. I think we'll just take a couple of minutes here before our next speaker, in case somebody needs to step out and get something to drink. And we'll start again at exactly 11:40.